had a tremendous sell-off in the US dollar. And that's because in the run-up to non-farm payrolls, we're getting a lot of reasons, a lot of indicators that lead us to believe that payroll growth will not be that great. That payroll growth could actually fall short of expectations on many fronts. And that is definitely playing a role on the psychological element of the markets right now. The dollar is down 1.5%, which is a pretty steep slide. Looks like it wants to make a run for 115. And it's because, first of all, the dollar ran up quickly and aggressively. On top of that, we had, market participants consider the Fed's hawkish stance and look for up to 3 rate hikes this year. But we had the FOMC minutes released earlier this week. They weren't that optimistic. And, so they weren't that optimistic. The Fed basically hinged its rate tightening cycle on the promise that Donald Trump is going to deliver. And, this is obviously a big promise. And even, the experts aren't sure, whether or not he's going to come through. So, that's something that is worrisome, because if he doesn't come through, then, the Fed's not going to be able to raise interest rates 3 times in a row. Now, we don't know yet. So the only thing that we can operate on is basically data. And we're in kind of a show me environment right now where the markets needs to see evidence of stronger data before actually, pressing forward with driving the dollar higher. And unfortunately, they're not getting that. The leading indicators for NFPs have been very soft. They've been wonky. They've been worrisome. And so, that's something that, we are obviously watching very closely as well.